all these cues going to be impacting our Indian markets? We will go across to our research team who is standing by to tell you what the trade setup is looking like and what are the important stocks that we're keeping on our radar this morning. Good morning, Vivek, as well as Hormaz. And Vivek, let me start with you first. All these cues that we saw coming in, nothing exciting. What is the trade setup looking like today for the Indian markets?
Well, good morning, Winnie. It's the last trading day as far as calendar year 2024 is concerned. Going into the last day or the last trading session of this particular year, what is it that we are looking forward to? Slightly muted cues, like you mentioned, all of the US indices closed in the red, but off the session low, so there is some slight minor positive takeaway from, but nothing taking away from the fact that 2024 has been a very strong year for equity markets, especially as far as US equities are concerned. Now, yesterday, an interesting trend, natural gas prices across USA surged almost 20%. This was on the back of a higher or a much stronger than anticipated winter as far as the month of January is concerned. Crude oil prices inched up slightly, Brent now trading near the $74.50 a barrel mark. Now, coming to the Indian markets, yesterday, very volatile trading session. The first couple of hours, you actually saw quite a bit of strength. The Nifty Bank at one point of time was up almost 1.4%, but then saw a very steep sell-off. Nifty Bank cooling off over 2% from the day's low. Most of the indices traded in the red. The only index that managed to marginally outperform was the mid-cap index, and on the back of that, the mid-cap index saw significant outperformance, especially against the benchmark indices that were seeing quite a bit of sell-off. There was also a bit of rebalancing, especially as far as the CPSE pack was concerned. So volumes over there, delivery volumes there were quite strong as well. Now, going into today, remember, market rate yesterday was in favor of declines. FI selling continued even, in what essentially a very thinly traded week as far as volumes are concerned. Asian markets, GIFT Nifty, all indicating a subdued start for our own markets today.
Okay, indicating a subdued start for our own markets today, but important stocks that you should be keeping on your radar this morning. Let me start with Mazgaon Dock. Now, the company has signed a contract with the Ministry of Defence, which is valued at around 1,990 crore rupees. This is mainly for construction of independent AIP plugged-based technology developed by the Defence Research and Defence Organization. So that is something that we are keeping an eye out on. Moving on, we have Ease My Trip that will be in focus. Now, sources say, CNBC sources say that co-founder Nishant Pitti is set to sell the remaining 14.21% stake for 780 crore rupees today. That's a one to watch out for. We have seen Nishant Pitti selling and reducing his stake in the company for a while now. Let's move on to Hindalco because that is also in focus. Now, the company has been allocated the Meenakshi coal mine in Odisha. The allocation has was formalized through vesting order, which was issued by the Ministry of Coal. Shriram Properties is the next stock that you should be keeping on your radar. They've announced a strategic sale of 3.9-acre land in Chennai, so keep an eye on that. RVNL, they bagged an order of around 137 crores sent from the Central Railway contract, and this is something important coming in there. Lupin, they've acquired a drug from Eli Lilly, which is a type 1 diabetes and type 2 diabetes drug that is Humosulin. So this is adding to the diabetes portfolio. So keep an eye on that one. Plus, one of their litigations with Teva and another company in the US that was going on. Now, there's a delay, Amneal. So there was a bit of a delay that is coming in on that front. And that would lead to a positive move coming in for Lupin. So keep an eye out on that stock. Okay, that's the stock to watch out for a trade. But let's move on and go across to Hormaz, who's standing by to tell us which are the important F&O cues in today's trading session. Good morning, Hormaz.
Morning, Winnie, and nothing exciting as you just mentioned, right? Final trading day, you end the year usually on a high, but the GIFT Nifty is indicating anything but that. As of now, another gap down start that is likely for the Sensex and the Nifty. Short positions were seen both on the Nifty and the Nifty Bank in yesterday's trading session, and the index breaking below key support levels at 23,700 was that level to watch out for. It's closed below that, so now downsides open up further, and FIIs, the ones that are still around, continue to remain net sellers in the cash market. They were net sellers in the index futures as well in yesterday's trading session, and the net long exposure now is down to 14.3% as of closing during yesterday's trading session. Even the clients added 2.32 lakh contracts in yesterday's trade. Now the short exposure now 1.97 lakh contract short now are the FIIs as we speak. Now, when it comes to the options data, there has been significant call writing that is seen at higher levels levels, be it 23,800 or 24,000. So now what was earlier a support has now become a barrier for the index to cross on the upside. And as I mentioned, the downside levels have opened up is evident from the fact that there was some writing seen in the 23,200 and the 23,300 put options as well. So those are the levels to watch out for going into today's trade. The immediate support, of course, comes in around 23,550 and 23,800, of course, because of the call, as per the options data. That becomes the first barrier on the upside that the Nifty has to cross. And in terms of stocks, there are no stocks in the F&O band today, but keep an eye out on Adani Enterprises. The stock was in the news all through yesterday's trade, and fresh long positions seen in that stock as well. So keep an eye out on Adani Enterprises, but downside levels, the one to watch for the Nifty.
Thank you so much for that, Urmaz.